With the rise of financial related TikToks, pages like Wall Street Bets, and the overall increasing media focus on financial markets, it seems that people nowadays are spending more and more time focusing on their personal finances. And I think that's a really great thing. Being financially savvy can really help you to build your wealth, plan ahead for the future, and overall just live your life to its fullest. And so with that, I thought it might be interesting to talk about how I think about investing, my investment strategy or philosophy, if you will. So before I get started, I need to give a pretty obvious but very big disclaimer. None of this should be taken as financial advice. I'm simply going to walk you through how I think about investing to fit my personal needs. And so what I talk about might not necessarily match or fit yours. Okay, so with that disclaimer out the way, welcome back to Assure. My name is Arvin and let's get straight into the video. For those of you who are familiar with the channel, you'll know that I'm a firm believer in paying off your student loans as quickly as possible if you're going to be a high earner straight out of university. I have a whole video dedicated to this subject, go check it out after you've finished watching this video, but the TLDR is that paying down your student loan early can save you tens of thousands of pounds in additional interest expenses. And so if I still had my student loan hanging over my head, that is the first thing that I would have invested into. Remember, paying down high interest debt, especially where the interest on the debt peaks, or basically where you're paying interest on interest, can be considered effectively the same thing as investing into a stock or bond. However, since I've paid off my student debt in full and don't have any other high debt over my head, I'm now free to go and make your more traditional investments. Now, just for 1 second, let's talk about investment categories. Now, there are lots of different types of investments. Your typical things that you've probably heard of, like stocks and bonds, physical assets like real estate, or even the more out there, unique or niche things like crypto or collectibles, for example. However, let's abstract away from all of that for a second and really try and simplify things down. Normally, when you invest, you're either investing for 1, growth, 2, income, or 3, a mix of those two things. A growth investment is when you hope that whatever you've invested in increases in value significantly over time, but you don't necessarily expect your investment to provide you with a regular cash payment, which is what finance professionals call a yield. You might have heard of high growth stocks. Now, these are stocks that don't typically pay much or any dividends, but they are supposedly poised for lots and lots of growth going into the future. So what you're effectively banking on or hoping for is that these investments, at the point at which you sell them, will be at a price significantly higher than what you initially bought them for. Income investments are investments where they may not necessarily increase in value much or at all. They might just be held at a very stable and steady level, but they provide you with a regular stream of cash flows or yield. So an example of a yield-focused investment would be something like a bond, which is basically the same as if you were to loan someone a bit of money. That person would pay you back interest every single month or quarter, and at the end of an agreed upon time period, they'd pay you back the entire amount that you had initially lent them. The thing with a bond is that rather than a person, it is a corporation or a government instead. Things like bonds and similar investments are normally quite stable because they're very well defined what they'll provide you. You know exactly when you'll get the cash every single quarter. And so because of that, there's not much uncertainty, there's not much risk, and so the price of those things is normally not too volatile. Finally, there are assets or investments that kind of do a little bit of both. A good example of this would be real estate. So here with either houses or commercial real estate, every single month or every single quarter you will be receiving a rent from the tenant, which is your cash flow or your yield, but also typically houses or commercial property over a period of time tend to increase in value. So here you've got a little bit of growth but also a bit of income at the same time. Next, let's look at my personal circumstances. And why do they matter? It's because it's important to get this context before I can then talk about my investment strategy. So for me, I reckon in the future, there's a chance that I may want to further explore my entrepreneurial side of things. Go and create my own startup and really try and develop something for my own. At the very least, I want to be able to have that option available to me. And so right now I'm focusing on putting myself in the best position to be able to execute on that. However, I'm way too risk averse to go and start up a business completely cold turkey. It wouldn't be financially responsible for me to go and leave my well-paying job and then just go plunge myself into this world of uncertainty. So for me personally, it makes sense to go invest in things that have a strong income element to them, so that by the time I go and leave my job and try and build up a business, I'll at least have a steady stream of passive cash flows there to support me and my family. I personally find investing into real estate is quite attractive because it does have that growth and income element to it. Now, I know that investing into housing can be seen as a touchy and somewhat controversial topic, which is why to the best extent possible, I'm trying to invest into that space while still maintaining an ethical lens. I want to invest in derelict housing that needs doing up. And so these sorts of houses require considerable money, time and effort to go and do them up from the really bad condition that they're currently in. And so that's where I've been focusing my time recently. I've been working with my dad to go out and identify properties like this, go and buy them, do them up, and then put them onto the market, either to sell or to rent out. So if you'd like me to do an entire video covering this process, I will of course do that. Just let me know in the comment section down below. So anyway, the TLDR is that my short-term strategy is to keep doing these investments into derelict housing, doing them up, refurbing them and selling them off. And that is what I've been focusing my attention on over the past year or so. The next topic I want to quickly touch upon is the idea or the importance of diversification. One of the first rules you'll hear from finance is to diversify, which means to not go all in into just one investment or into one asset class. That's because if that one sector that you've invested in faces a sudden collapse, you stand to lose a huge amount of money. And so what you want to do effectively is to spread your bets a little bit across different sectors, different asset classes, so that even if one goes down, you're still protected or hedged by the other investments that you've made that may not be affected. So over time, what I'll probably end up doing is focusing less and less on real estate investing and starting to put more and more of my money into things like investing into ETFs and stocks, which I will do through a stocks and shares ISA because it is a tax efficient way to do so. With a stocks and shares ISA, it's a tax-free account. And then of course, I plan on continuing to invest more and more money into Assure. To be honest, I haven't really gone all in trying to monetize this business or this channel. And to be honest, I don't really want to either. The purpose of this channel was always to help people who are in similar situations to where I was just a few years ago, and also to talk about my personal opinion or perspective on things that I think are particularly relevant or interesting to me. But as this community grows, if I stand to benefit monetarily while still keeping the original aim of this channel alive, then of course it's in my best interest to do so. So I'll continue to invest in things like better camera gear, better mics, better editing to try and really grow and scale this channel. And finally, I just want to touch quickly upon more speculative investments, for example, things like crypto or collectibles. Now, I'm personally going to stray away from investing into those areas as much as I possibly can. And that's because I don't personally believe in investing into things where I can't see the intrinsic value or benefit that that stock, security or investment provides. And so to me, investing in something like an altcoin doesn't really make much sense. It's more of a bet or a gamble than it is an investment. You're just hoping, or in my eyes, effectively you're just hoping that one of these things takes off and goes to the moon. But you have no reason to believe that one altcoin might grow more or less than another. It's just pure hope factor in my eyes. And so that's why I'm trying to avoid things like crypto or collectibles for the very same reason. And so with that, that takes me to the end of this video where I have walked you through my personal investment strategy. It'd be great to hear what your thoughts are, whether you agree with my perspective, and if you have any advice or things that you're personally doing that I might be able to take on board, also super helpful. Be sure to like this video, leave a comment in the comment section down below, and share this video with anyone who you think might benefit from it. And until the next video, see you guys soon. Take care.